Okay, guys. So what happens if you own property or you own property in your own name? What are the tax consequences and how is the tax accounted for? What are the repercussions, so to speak? Or how does it work? If I own property in my own name, what happens with this thing? Right? Because you hear a lot of people talking about structuring, especially when it comes to property, you know, use special vehicles, use a trust, use a company, and so on. I want to just talk about what happens when a person owns a property or properties under their own name. And I'll focus on the tax consequences of how we as accountants and tax practitioners look at this person. Now, you own a property, it's currently rented out. Let's say, for argument's sake, you've got a loan on the property and you are paying off the loan on a monthly basis. So, what would normally happen in such a case is when we do your income tax return for the year of assessment, we need to include a separate income statement for your business or your property business. What does that small income statement look like? It looks like all the income that you made from your property, so that will be rental income, and then it will be all the expenses that you incur in relation to your property business. So now the first expense that you can think about, if your property is in an estate, some of the expenses will include your levies. So we'll have rental income at the top, minus levies, minus municipality charges, minus agent's commission if you're using an agent to get tenants for you, minus any repairs and maintenance that you would have made, minus, most importantly, the interest portion of your loan, the loan that you pay every month to the bank. That part of interest that you're paying as part of the loan. As you know, when you pay a loan, it's made up of two portions. There's the capital portion where you are repaying the debt, and there's an interest portion where you are paying the bank the interest for borrowing the money. Now, the interest portion, that portion is deductible for tax purposes, so that will form part of that mini income statement. Now, once we've calculated whether the property business has made a profit or a loss, that profit or loss would then be added to your normal your normal taxable income, because as a person, I'm assuming that you would not necessarily only have your property as the only thing. But if you do have your property as the only income or the only source of income, then that would make up what goes and constitutes your own income tax return. Now, a person who's working somewhere else might definitely have income from their job. They would have a salary, they would have a bonus, they would have many things relating to employment. Now, over and above that, what needs to happen then, you have to then account for a profit or the loss that is coming from the property business. Now, any loss that you would have made in the property business will likely decrease what? Would likely decrease any tax that you've already paid as part maybe of your employment. And that loss could help you or could help generate a tax refund. You could get some of the tax that your employer had already withheld, or the tax that you had already paid through other avenues, just because in your property business you made a loss. In other words, the income from that property business, rental income, all the expenses associated to it are actually more than that income. That means that you made a loss, right? That loss will lead to a reduction in some of the tax that you've already paid, and that could then lead to a tax refund. Now, what happens if your property business has made a profit? In other words, the taxable, the income, rental income, there's a list of expenses, but the income is still more than those expenses. That means that you are going to be taxed on that profit. That profit is going to cause an additional tax liability for you, because you made a profit in your property business. Now, why does this happen? This happens because you, as a person, you are owning the property in your own name. So the taxes and everything in relation to the property has to come under your name with your ID and your individual tax number. How does this differ to people who are owning properties, maybe using a different entity? If you own a property, or if a property is now owned by maybe a company there, where you are a director, that company is the one that will have that income statement that I spoke about. The company will declare its it's the rental income. It will declare all those expenses, and it will depend on whether or not it's a profit. If it's a profit, the company will pay tax on, currently it's 27%, and if it's a loss, then that assessed loss will be carried forward. Now, you can think about it. If the property that you own is loss making, in other words, you are losing money every month, when you combine your bond, the interest on your bond, the levies, the municipal charges, you could actually get a relief from a tax point of view through this situation. You could get a relief from a tax point of view because the loss on your rental property, if it's owned under your name, will then go and deduct what? Any tax. It will reduce any tax that you might have already paid from your employment and other areas like I spoke about. So this is what happens when you own a property under your name. The more properties you own, this scenario that I described is just then obviously magnified. If you've got more properties, you might make a bigger loss, you might make a bigger profit. If it's a profit, you will be taxed more. If it's a loss, you'll get a bigger refund, or it will decrease your taxes, obviously up to the point where you've paid all. Your refund will be limited to all the taxes that has been withheld or that you've paid previously. So yeah, that's the story when it comes to property. Many people will advise you, if you're building a property portfolio, to think about structuring it, putting it in a company, putting it in a trust, maybe for estate reasons, to make sure that your property portfolio is protected. You put it in a trust, or if you want to continue using banks, remember at some point your credit score, you can only have so many loans under your name. So at some point you'll be seen as high risk. So that is some of the things that to think about if you're going to build a property portfolio, to say, how far do I want to take this? Is it just one property? Do I want 10, 15, 20, 25 properties? At some point, it might not be feasible to own 25 properties, and you want to borrow money from the bank, using the bank's money as many people like to do. So it's the structuring question. It's a sort of a different one to what I'm discussing here today. I'm discussing how the treatment is for tax purposes for people who are owning properties in their own name. The summary of that is it is aggregated and added into your income, and whether you made a loss in that business or a profit in that business, it will depend on whether you end up paying SARS additional amount or you get a refund. And by the way, this is not only limited to a property that a person owns. This same principle applies to people who could have a side business where you are doing things on the side, and any income from your side business which you are running under your own name would have to be put on a separate small income statement. Like I said, you add the income from your business during the year, and then any deductions of business expenses, whether you're traveling to your gig or you're doing whatever you're doing, it would have to be accounted for as part of the expenses for that company or for that business that you're running under your name. And whatever profit or loss, it will then depend on whether or not you are going to be paying SARS or you're going to be getting a refund from SARS. I hope it helps. Let me know what you guys have been, what are some of the questions that you have on this, and let's see if we can address them. Have you guys, do you own properties in your own name, and have you been getting a refund, or have you been paying SARS every year? We can look at some of those things and let's discuss them. All right, cool. See you in the next video.